All right, let's take a look at shares of Uber right now. They're wrapping up their first day of trading. The stock now a little bit below where it actually opened, trading in the 41s. It had opened right at 42 after pricing last night at $45 per share. So what should traders make of today's price action? Here to break it down is Kathy Donnelly, the co-author of the Life Cycle Trade. Kathy, thanks for joining us again. So certainly Uber, very exciting day, very exciting to see a company that everybody knows, everybody's probably used, come to the market. From a trading perspective, what kind of signals do you take away from the action that we've seen over the last couple of hours?
Well, I actually really like the action today. Compared to some of the IPOs we've seen in the last few weeks, I would say this is pretty tame. The range is about 10%, and although it is seemed to be selling as the day wears on and probably might end up at the bottom of the range, it's still about a 10% range, and 10% really is pretty good. And if it can stay in this range for the next few days or the next few weeks, we could see ourselves with a potential IPO base that will be pretty nice.
Yeah, so from a trading perspective, I guess more volatility might create more opportunities, but if someone just wants to look at buying Uber because they like the service, they like the company, is this a kind of action that would set up for a potentially more stable future? Obviously, certain stocks can get very volatile as time goes on, but at least in the early going, Uber doesn't seem to have kind of the frenetic characteristics of like a Beyond Meat, for example, right?
Yeah, exactly. Well, I think it has something to do with the valuation. You know, the underwriters kept it on the low end. They didn't want to see what happened to Lyft. So, and just the fact that Uber has a lot of revenue and they've got all these different avenues that they're going after in addition to ride sharing, I think it makes it a little bit more attractive. As you know from our research, we don't buy on day one. So this 10% range that's already started, if it can stay within 10, maybe 15, 20% and create a nice little consolidation, we've got a good base that we can work from and we can buy from there.
When you're looking at the charts of a company's first day, how do you tease out what's actually fundamentally happening with that individual stock versus what's happening in the broader market? So we have the worst week for equities right now. We have all these trade headlines going on. Does that impact your thinking when you're looking at an Uber chart today?
Jen, that's a great question. And I focus on the stock. What is the stock doing? There's so much noise out there. You know, there's tariffs, there's this, there's that, oh my gosh, what am I going to do? But the thing is, if the stock is acting right, and we've got like Uber, it only stayed in a 10% range. That's pretty tame. That's pretty calm. I'm happy about that. It doesn't really matter to me what's happening outside of that and what the other stocks are doing. Roku's a great example last year. It had a great move, and the market was also just as volatile as it's been the last few days, and it powered through. So at the end of the day, we got to see what the stocks are doing. We want to know what's going on in the markets, but what is the stock doing? And that's how we trade it.
So Kathy, if you're not buying on day one, like you just mentioned, a month from now, are we sitting here in Uber as $30?
Well, it might be $30, but a month from now, 4 weeks could be a really nice IPO base. And if it's at $30, that's probably, so that's a little bit larger than 10% range, maybe 20%. Don't ask me to do the math in my head here, but that still would be okay. And if it can stay in that range 4 weeks from now, it could still be a good base for us to buy.
All right, Kathy Donnelly, thanks so much for joining us.